We're Team 7A and we're Brommel Bikes.
My name is Bennett Johnson, and looking at the initial team strategy starting the simulation, the company selected two initial styles of bikes, this being Brommel Recreation and Brommel Mountain Bikes that will be introduced to New York City. We were familiar with this market, and that's why we chose to go there. While setting up the company, the initial focus was to offer premium bikes to customers at a lower cost to competitors who offered metal frame and traditional style bikes. And after the initial startup, the initial problems, including an ineffective marketing campaign and overspending, arose. Looking at financial performance, it was really scattered throughout the six quarters. Quarters one and two, we lost revenue by a couple hundred thousand, and this was due to R&D and huge shortfalls in sales activity. In quarters three and four is where Brommel really started to shine. Revenue rose by 1.46 million in quarter four from the 878,000 in quarter three, and in quarter four we got our first breakthrough with $112,000 of net positive income. Quarters five and six, Brommel continued to do well considerably with $2.4 million in revenue by quarter six. Net income peaked at $646,000 in quarter five and dropped to $331,000 in quarter six. Taxable incomes and earnings per share also grew, reflecting unequivocal financial growth and brand momentum.
My name is Andrea, and I'm talking about the manufacturing productivity. So in Q2, this round, Brommel utilized the capacity purchased during round one to project the demand. This was projected way over projected, and so the actual productivity rate ended up being 51.8% rather than the predicted of 70%. This unfortunately ended up placing us in the last round for a score of 0.299. And then in quarter three, four, and five, it grew exponentially as we predicted the productivity to be lower. Therefore, it was a lot more accurate, placing us at 65.7% productivity and a score of 0.786 and placing us in fourth place. And eventually, we ended up moving up to 97.6% productivity in quarter six with an all-time high. Finally, in resource management, in quarter two, Brommel was frugal at first, as the company wanted to create a cost-efficient strategy, and these choices were reflected in HR as the bare minimum choices were selected for benefits and salary. This decision landed Brommel in last place with an overall satisfaction rate of 51.3%. Luckily, in quarter three and four, Brommel made significant changes, increasing health benefits, vacation time, and pensions slightly above the industry average, which increased us into first place as the leader in HR and number one in HR management, and continue to grow in quarter six and five and six.
Hi, I'm Lily Dawson. I'll be covering the market performance for Brommel. We first launched Brommel in New York City with one hybrid model, and then followed by quarter two, we added our Brommel Pro bike in the mountain segment, and we reached a 7.05 total market share. By quarter three, after we raised our prices a bit, we rose to 13.05, and we had a stronger performance score in the market. In quarter four and quarter five, we expanded to Bangalore and Rio, and we introduced our third bike called the Tundra. And in quarter six, we ended with a total market share of 8.43%, and our total market performance was 0.17.
I'm Hallie Houghton Brown, and I'm going over marketing effectiveness. Bramble started strong in quarter two with a 0.72 marketing effectiveness. We ranked number one out of all of our competitors. After launching our web store in quarter three, demand nearly quadrupled and effectiveness rose to 0.74, peaking at 0.76 in quarter five, thanks to popular Bramble Pro mountain bike. However, poor ad design for the rec bike in quarter six dropped it back to 0.74. Strong product appeal and targeted marketing clearly drove success for Bramble bikes.
Next, for the creation of wealth for Brommel, we steadily grew revenue each quarter. We first started out with our initial investment, as we discussed earlier, and by quarter four, our cash had tripled and our retained earnings turned positive. Quarter five was our peak profit quarter, and in quarter six, we had our highest revenue of 2.46 million. Overall, we grew from 0 to 2.56 million, and then we remained debt-free as well, and we delivered consistent financial value for our brand.
Hello, my name is Ryan Keenan. I'm going to be going over investment in future and future risk. During early on in our rounds, we were able to jump out to a high score of 22.5 in investment in future. This came from opening stores both on the web and traditional. So we spent a lot in the beginning, but we were able to kind of keep that financial investment and spread it out over the course of the term with rounds 3, 4, 5, and 6, all keeping relatively mild amounts of investments and spending. mostly coming from web store expenses and traditional stores. And then for our financial risk, we were able to kind of keep a plan where we would not have to go into debt at all. So this means we spent kind of frugally in the first couple rounds, and over time we were able to, continue to spend without going into debt. And by round 5, we were able to even turn a profit on our retained earnings at 27,376, which allowed us to maintain a high financial risk portfolio, not having to go into debt at all.
My name is Meredith Jones, and I'll be going into asset management. So Brommel steadily increased capacity each quarter, starting from 0 in quarter 1 with the purchase of 3D printers. By quarter 2, our fixed capacity hit 24 and operating capacity reached 20. Our worker productivity was estimated at 70%, but it dropped in quarter 3 to 60% because of that low compensation that we covered, but improved to 70% in quarter 4 after increasing those benefits. Our total asset turnover peaked at 0.5 in quarter 4, and in quarter 5 and quarter 6, productivity hit 90% and then 93%. But overproduction hurt our asset turnover. By quarter 6, our capacity hit 92. And looking back, the purchasing of more 3D printers should have been delayed and to forecast more realistically and better align production with demand. And in conclusion, if we were going into our 7th quarter, Brommel Bikes would correct our advertisements to meet the International Advertising Federation guidelines to increase our marketing effectiveness, as well as decrease our operating capacity or adjust forecasting to make sure our asset turnover and manufacturing productivity are in alignment. And then we would continue our investment in the future in research and development, as well as continue to increase our workers' compensation. Thank you. We were Brommel Bikes.